Hello and welcome to Weekend Investing Daily Bytes. We are shooting episode 343, and today is the last day of January 23. And we'll take a look at some snippets from the economic survey that has been tabled in the parliament. We are hours away from the union budget. And just a reminder for all Weekend Investing subscribers, you can use the Wild loyalty discounts to renew your subscriptions and also to take on new subscriptions to any other strategies. Now, first, a look at the markets. You can see that Nifty dramatically had fallen 4 days here from 18,200 down to 17,400. So, 800 points on the Nifty were gone in 4 sessions before the recovery started yesterday from 17,400 and managed a close above the 200-day moving average. You can see that the 200-day moving average also gave a very nice support in September last. Before and before that, the instance was crossing of it was in July 22. So far, the support seems to have come in at the 200 DMA. Today also the market opened higher than yesterday, uh, immediately went down, and you can see that the support was again taken exactly near the 200 DMA, and the market recovered post that. So unless there is a surprise weakness in the budget speech, I don't expect this to be taken out so easily now. Um, if there's disappointment with some new initiative, then of course the 200-day DMA will be gone, and we'll possibly be first looking at 16,800 if that were to happen. In terms of the sectoral makeup for the day, PSU banks came back with a bang. The Adani FPO was subscribed on the last day. The fears, in fact, there has been a lot of fear mongering. Adani stocks were, of course, extremely overvalued. There are tons of stocks that have fallen 50-60% in the market. But because there was controversy associated with this group, the fall was very sharp. In fact, some of the stocks have not yet come off the circuit also. But I don't think that is a fundamentally a issue of the companies. I think it is just a matter of finding that equilibrium spot where the buyers will come in and start buying those stocks. But PSU banks were being touted as, a lot of losses will come towards PSU banking because PSU banks are full of Adani loans, etc. But many PSU banks clarified, even LIC clarified that their net exposure to the group was minimal, and it wasn't I think 0.7% was the PSU bank exposure, the entire book. And LIC also is sitting in some profits on their investments. So my takeaway from this is, while yes, some damage is there because of the crash, but maybe some froth has been taken out of the market. And just before the budget, we are essentially sitting with a very neutral sort of a situation where there is no froth in the market. So if something good comes around, market can easily take off from here. There is no overhang on the market as such that there is some profit booking to happen, etc. So autos and PSU banks have done well today. Public sector enterprise, metals, commodities, energy, real estate also added more than 1%. IT stocks on the back of Nasdaq losing ground yesterday, down 1.2%, and pharma has been losing ground gradually, minus 1%. Nifty closing exactly flat, as I also alluded to in the yesterday's DB, that I don't expect the day prior to the budget to be of any major move either way. And the market is now awaiting the union budget. Then it'll await the Fed outcome on first night. So we'll react on second morning. Third is again an expiry day, so moves because of that. So this week could remain choppy, maybe, I don't know. Uh, but let's see. So energy stocks that had lost the most in this last 1 week, along with PSU banks and Bank Nifty, uh, made some recovery on the day to day. And where did the recovery come from? It largely came from the broader market. So small caps up 2.6%, mid and small cap up 1.9%, Nifty Next 50 also up 1%, CNX 500 0.5%, and the large caps CNX 200, CNX 50 remaining a bit dull. In terms of weekend investing performance, some strategies extremely buoyant today. So MI 35 and MI 20, 3.8% and 3.18%. MI 50 also 3%. MI 32%, MI MT all cap 2%, and so on and so forth. Mostly the strategies all did well. Uh, my ATH was the only one below 1% at 0.8%, also because it is sitting in large cash right now. Uh, Today's heat map, you can see State Bank made a huge comeback at 2.84%. Autos were running, so Mahindra 3.54%. Mahindra is actually doing very well, it's nearly an all-time high. We also have it in one or two portfolios. Aisha Motors up 2.2%, Tata Motors up, Maruti up, Titan up, and Ultra Semco, JSW Steel both going up. Power Grid made a comeback at plus 2%. Adani Enterprise was up 2.8% on completion of the FPO. ITC up 2.19%. ITC looks headed for an all-time high. BPCL up 2.4%. On the downside, you can see Nestle, Britannia, Tata Consumer, Sun Pharma, Cipla. These were down. HDFC Life was down. Bajaj Finance after yesterday's bounce was down a bit. TCS, Wipro, HCL Tech, Infosys all down on the Nifty front. As I mentioned, small caps made a huge comeback. So you can see that last 6 months there have been two or three attempts to break down from 200 DMA. Every time it has broken down, it has immediately come back up. Let's see what happens this time. In case we have a favorable budget, I think we can go to 9600 also here. So we wait and watch on this one. But last 6 months basically has gone nowhere on the small cap index. So economic survey was tabled by the government in the parliament today. Economic survey essentially always comes. It's part of the budget activity, and it is tabled a day before the budget is announced. So it is basically stock taking of where we are in at today's snapshot of where the economy is and what is projected uh, further for the year. So what they've said, and I'll briefly go through this because you can always find this on the net also. India is to witness GDP growth of 6% to 6.8% in 23-24. So this itself is a good sign that if we are going to grow between 6 and 7%, and this is a real growth, and we get 5-6% of inflation, so nominal will be somewhere 11 to 12%, which is very very good for the kind of world situation we are in as of now. Also in FY24, also 6.5% is anticipated. So FY23, FY24, both these years would be nearly 6.5-7%. Uh, of course, the year almost coming to an end uh, comes after a year of 8.7%. So, from that perspective, because of this entire global bit of a slowdown, we are slowing down versus the previous year. So, the previous year also coming out of a COVID bottom was more in terms of sort of refueling what had been lost uh, to that extent during COVID. Credit growth to micro, small, and medium enterprise (MSME) sector has been remarkably high, over 30.5%. So this is very very important because this is clearly showing the thrust in the manufacturing sector that is coming in the economy. Capex by the central government increased by 63%. So that is also driving. So one is private capex, one is the government capex. When both engines are moving forward, that really means a sort of a double engine sort of boost to the economy. Inflation is projected at 6.8%, so it is beyond what is comfortable, but I think still it is much more muted than a lot of other economies are seeing. Return of migrant workers to construction activity helped housing market. Significant decline in the inventory overhang to 33 months, and that we are saying that the inventory in the housing market is declining very rapidly. So that is a very good sign that more construction projects can be taken up, and that will provide essentially employment activity as well as push to the growth in the economy. Exports have been growing. First half of FY23 included a shift in the gears of production process from mild acceleration to cruise mode. So exports are also doing well. Private consumption as percentage of GDP at 58%. So this is also very good sign that private consumption is very strong. So as I said, when you anecdotally look around, you go to a hotel, you go to the mall, you go to the airport, you go to buy a car. I mean, there are queues everywhere. So, anecdotally, there was no evidence that the economy is slowing down, and this is what the numbers are also showing. And survey points to the lower forecast for growth in global trade from 3.5 to 1% in 2023. Okay, let's see more on this. Also, IMF outlook has come out, and what they have said is that Indian growth forecast at 6.8%. So there is a sort of consensus that India is remaining going to remain a bright spot amongst global economies. And this is very important that together with China, India will account for 50% of global growth. Entire world, if the pie is growing by X, I mean 50% of that X will be provided by China and India. So it is natural to assume that money will flow towards China and India. Now, how much it will go to China, how much it will go to India, whether some of what is in India will also go to China, that of course is a different story. But the focus will be China and India for the next year, and that is extremely important and good news for us. US, which was growing 2% in 2022, is slated to grow 1% in 2024. So US is slowing down dramatically. China, which was growing at 3%, will grow at 5.2 in 2023 and 4.5. So China growth engines are supposed to really restart, and global growth falling to 2.9 versus 3.4. So entire world coming down, but India and China remaining the drivers of the growth worldwide. You can see in this chart also where entire world output will slow down in 23 from 3.4 to 2.9, and then maybe pick up to 3.1 in the year after that. Advanced economies will go from 2.7 to 1.2. So there is definitely a reasonably large slowdown in the advanced economies. And you can see the breakdown here where UK is really going to the dogs, going from 4.1 to minus zero point 0.6. And some other large names also, you can see US going to 1.4, and Italy and France also, virtually, stagnating before some recovery is projected in 24. So 2.7 going to 1.2, and just look at emerging markets, 3.9 going to 4. So there is no slowdown in the average emerging market data point. Uh, India is going down from 6.8 to 6.1 for the next year, and then going to 6.8. But China is, of course, uh, you know, going up hugely from 3 to 5.6, 5.2, and that is why the narrative is going on that money will is already getting reallocated to China somewhat, and that is why we are seeing some in outflows in the interim period because of all this. So hoping that while India is going to go from 6.8 to 6.1, but with nominal growth at 11 to 12%, I think stock markets on an average, which have been growing at nominally at about 11 to 13% on the Nifty, for instance, I think that trajectory remains. Whether that becomes lumpy in one year or it's spread out evenly is to be seen. But at least from the runway perspective, your runway is laid out. You know, of course, there can be events that can derail the system anytime. That can always happen, but the general runway that is available is extremely robust. It is laid out well at 6.8% and 11% nominal growth. Now we have to see how well we can perform on top of this runway with our stock selection, with our strategies, how best we can do with this and improve on the base effect. So essentially, the summary is that all is well in the India market story. We need to keep believing in the India growth story. Short-term volatility and news-based items will keep coming, and that may disturb the continuity for short periods. But as we have seen in the last many decades, we are going to trend on the upside. The global slowdown is impacting us, but nevertheless, we are one of the strongest growth stories in the world. So, with this positive optimism, I think we can now go towards the budget tomorrow, and let's see what the FM has to say. And my gut feel actually is that we will not see any negative surprises, and I'm pretty hopeful that post the budget we will see some positive outcomes in the markets. So, thank you so much for watching this, and I'll see you in another one. Bye.